Hello, my name is Andrew Pang. Welcome to another edition of CMS Forex News. Today's Wednesday, October 1st, 2008. Managers at large-scale Japanese companies grew more pessimistic about business conditions in September than they were 3 months ago. The index among large manufacturers fell to -3, while the non-manufacturing index fell to 1. In Australia, manufacturing activity fell for a fourth successive month in September. The AIG manufacturing PMI rose slightly to 47.2, but remains in contraction as domestic demand continues to be squeezed by high interest rates. The Aussie-Yen pair rose to retest its high from yesterday near the 85 level as global markets were up in Europe and Asia. However, the open of the New York session brought back risk aversion, and the pair, which is used in carry trade, fell 200 pips to test the 83 level. UK manufacturing contracted much more sharply than expected in September. The manufacturing PMI fell to 41 from 45.9 in August. That's the lowest reading since the series began in 1992. An index of services for the 3 months through July saw flat growth. That was the first time since August 2002 that there has been no increase in the headline rate. The pound fell lower against the dollar for the third straight day to test 1.7630. That's a 1,000 pip difference compared to its level just 5 sessions ago. In most of these sessions, the sharpest declines have come during the New York session, which was the case today. The final version of Eurozone manufacturing PMI for September declined to 45 from the preliminary release of 45.3 and is down from 47.6 in August. The decline in the final version surprised forecasts on the downside. It's the 4th month in a row that manufacturing activity is below the 50 boom-bust level. German retail sales in August grew 3.1% in seasonally adjusted terms, which surprised forecasts on the upside and reversed the 1% drop seen in July. The monthly increase was the biggest rise in nearly 2 years and is a rare sign of good news for the Eurozone and its largest economy. However, on the year, sales were down 3%. The Euro-Swiss franc was trading near the 1.58 level overnight as European stocks were positive to start the 4th quarter. However, at the start of the New York session, the pair fell 100 pips to 1.57 as risk aversion increased with the poor performance from U.S. stocks. The euro-dollar pair fell for a third straight day this week, breaking below 1.40. That fall was not as volatile as yesterday's session, but this week has already seen the pair drop almost 600 pips from Friday's close, near 1.4650. Non-farm private employment decreased 8,000 from August to September 2008 on a seasonally adjusted basis, according to the ADP. That was better than forecast, but traders will wait till Friday's government report to assess the labor market in the U.S. Expectations are that the economy shed 100,000 jobs in September. U.S. factories had a terrible month in September after almost returning to expansion territory in August. Today's figure of 43.5 missed expectations of a 49.5 reading and is the lowest level since October of 2001, the month after the terrorist attacks on the United States. Also, the drop in the index between August and September was the biggest since 1984. U.S. construction spending performed better than expected in August. Total spending was flat, but July's figure was revised lower. Residential outlay saw a rare increase and offset a dip in commercial building. The dollar-yen pair fell in New York trading, but volatility was much lower than the last 4 sessions. U.S. stocks were down today as investors continued to fret about the bailout package, which the Senate was set to vote on later today. The weak manufacturing report gave market bears more ammunition, even as oil prices fell to $96 a barrel. Tonight, Australia releases its trade balance figure. Overnight, we get nationwide housing prices from the UK, along with its construction PMI. Switzerland releases its SECO Consumer Climate Index and its central bank's monetary policy assessment. The Eurozone posts its PPI. Early tomorrow morning, the ECB will decide on interest rates, though it is expected to hold rates steady. All eyes will be on the comments made by ECB President Trichet in its press conference for signs of an easing bias. The U.S., meanwhile, will post its weekly jobless claims and factory orders. And that wraps it up for the day in Forex News. Please join us again tomorrow right here at cmsfx.com.